founder and chairman at Globalforay. Pashupati, good to have you with us here. Thank you very much for your time. I don't know if you heard the piece that Nimesh put out on FMCG, but my question, of course, you can talk about FMCG if you'd like, but broadly the consumer name, which actually many on the street are also pushing as if, to say that its time has come and that maybe, it'll start to do better. The latest kind of news which the market is excited about is potentially that GST slab realignment, that 12%. And how that perhaps gives another leg to consumption. We don't know if it will happen or not, but the FM herself has spoken about this. What is your sense? Do you think one will make money in consumer names from here?
Well, consumer names, as you rightly mentioned, have been a bit blah over the last, 6 months to a year. And that obviously is not been great news for the markets. They've kind of held in there. But again, consumer names tend to be bought in defensive markets. So I think we need some kind of move towards new investors being defensive. But in the meantime, they've not really sort of really performed fabulously. In fact, they've been kind of blah. But their time will come. I think obviously the cut in GST to 12% will be a big boost for them. And I think maybe they're just waiting for that.
Pashupati, hi, afternoon. Any new ideas, any new purchases that you guys have done?
Well, no, actually, what has been of concern has been the large number of IPOs that have come in terms of the volume. And I think that's basically weighing down the market. I have bought a couple of them around the offer price. Some of them are waiting for them to come back to the offer price, which I think will happen. Just because there seems to be about $7 or $8 billion worth of IPOs that have come in the last 30 to 45 days. So it's like a huge amount that the market has to absorb. And I think our market kind of gets driven by supply and demand, and there's been a lot of supply and a lot of PE people exiting and things like that. So that's not a healthy sign for the markets in general. It's showing that our markets are overvalued and people want to get out. So let's see.
Which recent companies did you buy?
I bought a couple of long-term ones. One of them is Aegis for Park, which I think is a stock that it's not going to do anything now. I think it's trading about around the offer price, maybe 5 rupees higher, which is neither here nor there. But I think it's in a business that's here to stay. And a lot of it will just be decided on what happens in the US. And the president has actually mentioned that anyone who sides with BRICS, we're going to have another 10% tariff. It's not come in yet, but who knows whether it'll come in tomorrow or day after. So I guess the last time I checked, India was part of BRICS, the center eye. So we're going to have some extra tariffs maybe, but let's see.
All right. Hi, Mr. Advani. Good afternoon. Good to see you, Ben. What about Indent Bank? What is the call? We were debating about this the last time around, and there's an equally bullish and bearish argument out there. Some would argue about the price to book, and some would argue what is in the book we don't know. What are you making of it?
Well, as I mentioned the last time, the Indent Bank is a bit of a trading stock. You trade in and out, either from the long side or the short side. I think the last time I was on your channel, it was around the same price. So I would not have made any money or lost any money since then. But I am, at the moment, not in the stock.
All right, got it. What about the infrastructure theme? That's something that you like, right, in the past?
Yeah, I think that's going to continue. I think that's here to stay. See, I look at infrastructure being a cheaper version of defense. Because defense, as Dipin also said, the P's are very high. And it's very difficult for us to sort of traditional market players will look at fundamentals to say, hey, we should buy defense stocks because they're all. I think the cheapest one is 40x, so it's a tough call. But infra is lower. Infra is also here to stay, and particularly if you're in the construction space, you've got the choice of redevelopments, new construction, RERA projects, roads. The world is your oyster. In fact, one of the companies, I don't remember offhand which one it was, actually mentioned that they don't want to even get into projects unless they can see 20% IRR. So, which means there's a lot more projects and a lot less infrastructure players chasing them. So for them, they can't raise the prices yet too much because everyone's still being very cautious. But the thing is, they've got as much work as they want to do. And I think that's very encouraging for the sector.
Give us some names, Mr. Advani. Jay Kumar is something that you liked. L&T is another one that you've spoken about in the past. Anything from the space?
Those are the ones. I mean, Jay Kumar is doing very well in the road space. But again, I think even the realtors are also, doing their projects. But I think as opposed to real estate, I am more comfortable in infrastructure, simply because I feel that infrastructure is where it's at, because the companies can actually move. The construction people are going to make more money than the real estate people, according to me, in this next cycle.
Okay, all right. So that's a thumbs up on infrastructure players and contractors, and they haven't actually, absolutely, to be fair, these stocks haven't moved. A lot of other parts of the market, like EMS and defense, they've all been soaring, going through the roof. By the way, on a side note, that was important update coming in on Selby Aviation. This was the aftermath of Operation Sindoor, where India had decided to revoke the company's security clearance. And Selby obviously was a major operator at big airports. And then they had gone and challenged that in the courts. And now it seems the Delhi High Court at least has not upheld their pleas. That's important news on a side note. But Pashupati, hi, great listening to you this afternoon. Tariffs and wars aside, market's been actually remarkably resilient. The US market and, of course, even our market. What do you think the second half has in store? I mean, you've given us some pockets like infra where you can still incrementally add. But if you're out of the market, you'll always regret missing. If you're in the market, you're worried about valuation. So tell us some more approaches.
So I think you can't exit the market because India is still you hear from people that India is the bread of the month and the India market is doing fine. But you've also got people from outside saying, how do we make money in this country? And for foreign investors, of course, the funds and all and the insurance companies and the sovereign funds are sorted out. But if you are running a company and you want to try and make money in India, or you are an investor who thinks that they want to invest in India as an individual, it's extremely difficult and cumbersome. So I think that we need to figure out a nice way for people to be able to invest in and out. I mean, people don't want to put their money and get it stuck. And they don't want to go through a mutual fund because the mutual funds charge a lot of money. And there's no Index India mutual fund yet that I know of that is a true index fund like Vanguard is in the US. So I think that, it's a quandary. But people are looking to try and invest in India. But the question is, how? And if you're a true Gora, you can't just walk into a bank and open an account. It doesn't work like that.
Speaking of Goras, there are Goras who walked in, did all kinds of trades, and now they have a tussle ongoing with the market regulator. You've seen, many cycles, Pashupati, but this is something new. The regulator taking on a firm of this magnitude and a firm that had very, very large trading positions. Now, do you see this impacting the market in any way? Maybe immediate volumes, day-to-day volatility, trade? And this is more on the trading side than, of course, fundamental buyers who wouldn't need to bother. Well, do you see any ramifications?
Well, of course, I think that this is a notice to others who are in the same game, and there are plenty of others who do play the same game, to be wary of the Indian regulator. The question is, I hope the Indian regulator is able to claw back some of the gains. I don't know what it'll do with the money once it gets it, but I think that it's worth, shaking them to see if they can give back some of it. I mean, I think they've asked for about 15% or 20% of what they see as
4,800 crores. Yeah, roughly 4,800 crores as of now.
Yeah, so they've asked for a portion of the gain back.
Yeah.
If I was, I'm not Jane Street, but if I was Jane Street, I'd probably, make noise and then try to settle with the regulator because they do want to be in business here. And but what's to stop a Jane Street becoming? I said to someone, there'll be an April Street next week, or a July Street. So I think that, but our regulator at least has picked up the patterns, albeit late, but they picked up the patterns. It would be nice to see if they could pick it up earlier. And also, I don't know if they're going to be able to get any restitution from any of the brokers who've done the trades, because I don't think Jane Street had a brokerage company. So, I think those guys also need to try and persuade Jane Street to give some money back.
No, there will be there will be some money, in the custody of brokers, because they were a regular market participant, Pashupati. So that is there, and I imagine that those accounts are frozen.
Well, we'll see. I mean, I haven't heard anything. I mean, I hope you're right, but that I don't think would be a small amount. I mean, that'll be a small amount.
No, it's not a small amount. I think it's they're very large. That's the whole point, right? With Jane, it was all very large. If it was small, and the capital and the money essentially is what allowed them to do what they did. From what I understand, I mean, it's pretty large. And those accounts perhaps would already have been frozen. But anyway, we'll see as we sort of look ahead at it. But points taken, Pashupati. Thank you very much for joining us.
Thank you.
Good speaking with you. It's always a pleasure. Let's take a quick commercial break here. And as always, we get you a check on what's happening in dealing rooms in our D Street chatter segment. Nimesh is back with us for that. Stay tuned.